Good morning, everybody. Welcome to the Flow Show. Hope you're doing all right. Hope you had a good weekend, everybody. How are you two guys doing?
Very well. Good morning.
Morning.
I spent the weekend on a Greek island, so I'm doing well.
Very nice. I spent the weekend trying to fix fucking Twitter. I hate you, Elon.
We all do.
Yeah, especially today. He's made right pig's ear of things, hasn't he? For those of you on the use tweet deck, it's all gone up in smoke. Anyway, let's hope he fixes it for the rest of the day. Right, let's get into it. A new week, a busy week coming up. It's jobs week, and we get some other big data as well. The ISMs, rest of the PMIs. We've got tons to get through, so we're going to have a look at what's going on. We're going to start in China, and following the comments from a PBOC inspired paper last week. They actually came out with some further comments on Friday, saying that they will step up macroeconomic policy adjustment. They repeated that they will keep the yuan basically stable. That's a long-term comment. Also repeated that they will implement targeted and forceful monetary policy. What was a bit stronger was that they vowed to firmly prevent the risks of huge yuan fluctuations. So a stronger comment coming in for dollar China. And they backed that up overnight, again with a low fix. Market was expecting a fix of 7.2464, and they fixed at 7.2157, about 100 pips below Friday's fix. So still fixing the amount very low end of expectations. Bloomberg apparently picked up talk that they had Chinese banks intervening again overnight. They seem to think it's a new policy that bringing out an old policy again, even though we know they've been doing that all last week. Bloomberg decided to join the crowd in claiming that one as well. We did get some data out from China as well over the weekend. The Caixin manufacturing and services PMI, I think. And if we find it, where can I find it? Where is it? Nope, can't find it. Oh, there we go. So manufacturing came in at 50.5, so just slightly beating expectations there, 50.2, but still confirming a dip from that number as well. It's been PMI day pretty much all over the place. As you can see in Japan, manufacturing matching the prior number or the flash number and expected 49.8. Again, another one moving into contraction as well. However, the Tankan survey, if you like, the index was a bit more positive. Q2 numbers coming in for this one, so the start stuff. Large manufacturing index coming in 5 versus 3 expected and 1 prior, so a decent beat there. Same for non-manufacturers, coming in at 20, not as much as expected, but still a big improvement on last month as well. So as you can see there, numbers looking pretty good from Japan, particularly from manufacturing, and that got one of the cabinet members coming out and saying that those numbers pretty much surprised to the upside, but a bit of caution as to whether they will continue to remain thus. Australia house prices climbed for the 4th month in June, according to Reuters, keeping an eye on that stuff. That will keep some thoughts perhaps in for the RBA, which is going to be tonight. And market still, some of the market's still 50-50 over whether they hike or whether they pause. The probability stands at a 63% chance of keeping rates unchanged and a 37% chance of hiking by 25 pips. I think this is, correct me if I'm wrong, this is Lowe's last meeting. I think so. That sets him up maybe to set the stage for whoever's coming in after him. what do you guys think for the RBA tomorrow? You got any expectations?
Well, the market's pricing slightly better than 50-50 of them not hiking, right? If I'm not mistaken.
Yeah,
But,
that one measure, yeah.
Yeah, the fact that it's his last one makes me feel like he might want to go out with a bang. I don't know. I think it's 50-50. I really don't know. Market's going to move either way, I think.
Yeah.
Yeah, I don't have a view. Sorry.
No worries, mate. Okay, you got any thoughts for the RBA?
Well, the data were mixed lately. Well, again, it's a flip the coin for me. This one, they could do, yeah, going out with a bang, as you say, do the last 25 and then go firmly data dependent, which they are already. It's just yeah, flip the coin really. I don't really have an opinion either on this one. Aussie has been doing quite well towards the end of the month. Well, I mean, versus dollar is one thing, but if you look on the crosser side, it's been doing quite well. It could, you know, a bit like the Swiss, they could do the 25 because they know that an underpinned currency is somewhere fighting a bit deflation, but we need to also have the real measure of that, because I recall when was it, like a year or so ago, when Lagarde was actually fighting back against the impact of the currency on inflation, and there were some studies then that the currency needs to strengthen by 10% to impact the inflation by 1%. So yeah, that leaves probably the door open for his last 25, and then we will see what happens. I'm actually looking it up because I didn't realize that it's low last meeting.
Yeah, I think I'm sure I read it this morning. Just flicking through some bits and pieces that it was his last meeting. But yeah, if I'm wrong, I'm wrong. And either way, I don't think it makes much difference for that. I don't see the Aussie gaining meaningfully unless they indicate with a hike and more to come. So if they turn a bit more hawkish. So other than that, I think it is a bit of a coin flip. Coming over to the rest of the data, PMIs dropping on the board. Coming into the Eurozone, Spain saw a move, still in contraction, but a slight tick up from the 4.7 expected, still lower than last month. Italy as well, getting worse. France, a little bit of an improvement. Germany, getting worse. Greece, look at Greece still going all guns blazing. As tick up, 3 pip tick up to 51.8. As you can see, all the numbers, well, apart from Greece, all still well in contraction. And for some getting worse, some not as bad, but all on the negative really. So that's the state of manufacturing for June as far as those PMIs are concerned. ECB's Mackloff says he sees rate hikes near the top of the ladder. He was speaking to Irish Times last week. Right, coming back to the US data from Friday, and obviously the PCE numbers was the big one to come out of. Core PCE dipping a pip. So market was expecting things to come out unchanged, but it actually pulled back a pip. That's still sticky enough though. The PCE had a few shenanigans going on because of this expected 4.6 number. That was, I don't know where they got that from, but it was wrong on a lot of calendars. Even Powell said it was expected to come in at 3.9%. So that was around the real expectations for that. It came in at 3.8%, so still a decent pullback. But the numbers underneath weren't looking overly hot. Income was up, but spending missed expectations only by a pip, and real spending came in flat, which has had a few commentators remarking that that doesn't bode well for the consumer moving forward. We'll have to see whether that translates into retail sales data following up. Then we got the final Michigan numbers there, and no change to the inflation numbers, the 1 year and the 5 year. There they remain at 3% as per the flash numbers, and 3.3% as per the flash there, but a touch improvement in the final metrics on the indices there. Current conditions up to 69 from 68, overall sentiment 64.4, so a bit better there, and expectations up a couple of pips as well. So a bit more soft landing data from the US on Friday. Fed's Goolsbee said that he's not made up his mind on rates. Well, thank you very much for that input there, mate. And just something on the dollar, because a lot of people keeping this conversation going about the dollar and whether it's losing its reserve currency status. Well, the IMF were out with its quarterly report, and it said that the US dollar share of global currency reserves rose slightly to 59% from 58.6% in Q4 2022. The euro fell a bit to 19.8 versus 20.4 in Q4. So no signs, big signs there that the dollar is losing its reserve currency status there. Bit quiet on the headline front. We've got obviously a lot of the Yanks are going to be off today because of the Independence Day holiday tomorrow, and it's half day in markets, US markets today. So many people will be taking a long weekend. Have you got, you guys got any headlines or anything you want to chuck in that I may have missed or you want to bring to our attention?
Yanks taking the day off, and Yellen is going to China to continue talks, right? So there's a lot of, I'm sure there's a lot of stuff going on in the background there, and I think that's important. It's definitely a change of, I don't want to say strategy, but a change of how things are done compared to, let's say, the Trump presidency. So it's a lot less, how should I put it? Adversarial, let's say. Oh, I found a good word. Anyway, but no, otherwise, otherwise very, sorry?
Can you say that again?
No, but otherwise it's been deadly quiet, and it's going to be like that tomorrow. So, yeah.
Yeah, nice. Kay, you got anything?
Yeah, I was going to bring up that Yellen thing as well, especially after the new ambassador to the US met Biden to give his credentials and stuff. Yeah, I mean that is one to look out for on the geopolitical front, I reckon. For the rest, it's been dead quiet, right? Over the weekend. Well, apart from the usual Eastern Europe and Russian things, but yeah, it's been very quiet. Euro looks a bit soft. Dollar looks a little better selectively, but it's especially Euro and Swiss looking a little bit soft this morning. Yeah, let's come back on that Swiss just for a minute, because you ran over the numbers. Their CPI came off a touch. We know that SMB is in a fight against inflation, and they are also using their currency, as we know, to try and fight this. But I find the CPI number, and I also think that the data there was some data out last week, because I made a note on my post-its to sell Swiss at the end of the month, because first of all, I think with this inflation slipping, they may be starting to think that a lot of the work in the Swiss franc perhaps has been done. They probably will hold the market on its toes. But then also, I don't see too much of a reason why they should be so aggressive in buying Swiss franc right now, unless they want the Swiss franc to put CPI below 1%. But And also the last thing, and so you have this dollar Swiss on, which is, I think, finding a bit of support as well in the low 89s, and then also combined to that, we have the euro Swiss, which is finding bits under 97 lately. So they may not just stay there and push the Swiss franc a lot higher. So I took a little position on the Fridays, fixing a bit short Swiss on the back of this, and I'm getting some sort of confirmation on this Swiss CPI. So that's one I think to keep an eye on. I don't trade Swiss very often, especially not because it's really ruled and directed by the S&P. But if the CPI comes off, they may just relax it a little bit and let the leash go a little bit. So that's my thinking. There's a level. I'll show it later, but there's a level in the 90-30s somewhere. If that goes on dollar Swiss, perhaps we can see a little bit of acceleration. But yeah, overall, it's been very quiet.
Yeah, thank you very much, mate. Mike just asked a question: am I surprised to see the pound still at hanging around 127 with a weak PMI? Well, the PMI improved, Mike. It went up to 46.5 from 46.2. Remember, these are final numbers, so the bigger move we saw over the flash number, which was 46.2. So, but you know my thoughts on the pound. I don't see any reason why it goes meaningfully higher right now, and I don't see any reason why it goes meaningfully lower right now. I think we're in for a bit of consolidation. It's certainly quietened down to how it had been acting over the last couple of months anyway. The levels are doing what the levels need to do for now. So, no, I'm not surprised to see it up around 127. Manufacturing is still weak, but it improved over the flash number. That's why we haven't seen much reaction to that one there. Right, so as mentioned, we've got a busy week this week. So that starts today with the ISM manufacturing from the US. So two things to keep an eye on there. Obviously, the headline number in itself, but then look at the employment and the prices paid for the inflationary picture for that. No expectations for the employment. Prices paid is expected to dip a couple of pips to 44.0 from 44.2. The headline number is expected to go up a pip to 47 from 46.9. So no big changes expected in the numbers at the moment. If they are big changes, we're going to see some moves. If it goes further into contraction, that's obviously going to take the wind out the sails for the dollar and probably yields. Manufacturing employment is still in expansion at 51.4. So if it stays there, that's going to keep expectations in line for the NFP on Friday. If it's softer, you're going to see the market rejigging perhaps some of those expectations. Tomorrow, as mentioned, or overnight, depending on where you are, is the RBA. Then into Wednesday, and we get the final services numbers from around the world. Also get the FOMC minutes, which shouldn't, as usual, be too much to write home about, because we've heard a million times from every Fed member since. But you never know, they might drop something in here that we haven't heard before. On to Thursday, and that's when jobs really kicks off in the US. But before that, we get Eurozone retail sales, and then we get the challenger layoffs, ADP and JOLTS and jobless claims. So 4 jobs numbers there, as well as the ISM services. Same thing for that as the manufacturing. Keep an eye on the components for employment and prices. And then obviously into Friday, the big number is going to be the NFP, and it's double bubble with the Canadian jobs report as well. So all you loony traders need to have 8 eyes to watch those 2 numbers. So that's what's coming up this week. Can be busy. For now, prices probably not going to do an awful lot with a lower liquidity. Obviously, with the US shut later and tomorrow, might be a dead couple of days outside of the data points. Watch out for that ISM today, because there is lower liquidity, less people at their desks. It could mean we get bigger moves on the numbers, just as there's some low liquidity gaps, could appear. So just be wary that we see some more volatile moves on that data, especially if there's a big variation. That in itself could give us opportunities if we hit levels that are worth trading, maybe stretch points of recent ranges. Dollar yen, we've got this 145 up here, which we've had a little look up towards this sort of 90 to 145.10 zone. We had a little look up there and have held it again. At the moment it's holding off. We've got some levels down from 144.20s down to the big figure. These are the sort of levels you might expect to hold while there's not a lot going on and while we've got these holidays in play. If you get any big outsized moves, that may be something to look at if it pushes things out of sync. Would the MOF look to use this as an opportunity, Kay, do you think? Get a bit more bang for their buck if there's a bit less liquidity in the market, or are they still not seeing the right conditions yet?
Well, I wouldn't think that. Well, it would be a surprise if they use a US holiday, especially if we don't put that extra move in up to, let's say, 145.5, 146 out of the blue with for no reason at all. They may intervene because of the speed and the levels, but I don't think they will use the US holiday to curb any of those moves. That would be a real surprise to me, I must say.
Yeah, no, I agree with that. I thought I'd put it out there anyway, because I know some people will be thinking it. But yeah, it's not the conditions for them to do so. It would be a complete surprise if they did. Euro dollar,
because if we have also to know one thing: if they intervene outside of their time zone, they may, and they did in the past, use foreign central banks to intervene on their behalf. And I don't think that the US Treasury or the Fed would be very happy if the MOF intervenes when the Americans are on holiday. I don't think that would go down very well.
No.
Unless we are at their levels, of course, but that's a different story.
Yeah. Well, yeah, they've got to take actions that they see fit for their own economy, irrespective of what everyone else is doing. But you can bet there'll be eyes watching either way. As I was about to mention, euro dollar as well, still going a bit sideways, still messing around with this 108.30.70 area. Once again, it's finding itself as support at the top of that band this morning. Rallies so far limited up to that 109.40 area again, which is one of these on-off numbers that shows up, then washes out, then shows up again. So the levels are there again to respect, up to 110. If you're going to move up there, might have to think that that's a bit of a stretch point if it comes over the data. Likewise, down into 108.30, 108s might be a key area to play, just a little bit of a scalping for the range. It's a funny time. We had obviously month end last week, and when you get the first day or two of a new quarter, particularly a new second half of the year, we can see some flows coming in as people put trades back on that they might have taken off previously to reallocate, rebalance, put new allocations on in the second half of the year. So don't rule out seeing any shenanigans around the fixes still again today, particularly the London fix. But overall, it looks like range plays for me. Dollar China, as I was looking at a bit earlier, just had a bit of a downward move again off the highs. We managed to get above 728, and I managed to get some off in the end last week. We're holding where we need to hold, down into this 125, 124.5. which was a bit of a break point, this zone that I had previously. So the fact we're holding there keeps the trend in play. That's the first level now that we have to break to undo some of the trend higher. If we do that, then the bottom end of this zone is next, then down into the 119s, 719, 720s, and then down to this 716, 17 area down here. So still in play even while they're coming into the market, and still it's applying the brakes. It's not slamming a barrier right in front of things and shutting the door and saying no more. So this does have the prospect of moving back higher. But again, we might see a little bit of a sideways action while a lot of the markets are off on holidays. Euro sterling had a move back under 86, staying below for now, but not dipping back too far. Again, I keep repeating this, more sideways action from this. Going to keep an eye on 85.70s, another one of those on-off levels, just to see if perhaps we get down there, if it holds again. Otherwise, I'm still either going to trade it down here into the 85s or a move up to the 87s. I'm not too keen to mess around in the middle here, bar a scalp. Just back to dollar yen. I was looking at this morning because we were ticking up towards 145 again, got up to 88. And I think if we get a break a second time, it's different circumstances to this break that we got last week, which was a Tokyo fix. If we get a break a second time, I think it's off to the races, because a lot of the market's still got its eyes on this one as an intervention level. It's doing what it needs to do. It's holding, which it did on the way up here. So this is where it held on the way up, a big level, lasted a month before we really broke it. And then as we came down, it held a couple of times on the way down as well. This is why this level is so big from a technical perspective. For now, it's holding it. We've spent 3 days, let's call it, having a go at it, and it's holding. So this shows you how strong a level can be, a historical level, one of those ones you keep on your charts forever and ever, and every time you visit it, something happens. So yeah, I'm thinking if we do get a break this time, it's going to be something that goes, and it could be a quick flyer to 146, maybe even higher to 147. If there are a lot of people front running this and shorting into here, they're going to have their stops just above, and they could get taken to the cleaners on another break. Kay or Stel, who wants to grab the lucky screen?
Whatever you guys want. I don't have much new stuff to say, but I always have stuff to say, so I leave it to you guys.
Yeah. Kay, do you want to have a little look?
Yeah, sure, mate.
And I'll take a look tomorrow.
Yeah.
Yeah.
Right. Okay, let's first talk about that Swiss, right? This thing here in Euro Swiss, every time we came below 97, 90, here we have a low just below 97, 97, 97 here, just below all the time. It seems to be bouncing a little bit, and as I said, I don't think that SNB finds it extremely useful to sell into a hold. It's not their modus operandi either. So I think there may be, with the CPI slipping, there may be a case for this to at least try it back into the 98, see where we end up. If we start to break 98s, 98.30, 98.45, it may perhaps accelerate a little bit. But I'm more interested in what's happening on the dollar Swiss. If we look at this, we seem to be forming a triangle, and also these levels here in the low 89s, we've seen like one dip here, one dip here, one dip here, another one here. They seem to start to hold. If you look at it as a pattern, we are working on a triangle. So I'm quite interested to see if we can get at least tests here into the 90-30s. Well, I don't know about the dollar really, but if you look at what the yields are doing, you look at the 2-year yields, they are again trading against the channel or whatever wedge high here. The market seems to acknowledge what Pavel was saying. The data have not been of sorts of putting a cap on yields either. And then we have this phenomenon where yields are going higher, but stocks not going lower. It's still quite positive. And if both yields and stocks in a currency rise, I don't see too much of a reason to be short dollars right here and now. As been shown already a good number of times by many of the ForexAnalytix crew members, we are on relatively important levels in the US 10s. This afternoon we have PMIs. It's the final HBOC or whatever PMI, and then we have a bit of ISM coming out as well. The market won't be very liquid, so watch out for those that may have an impact on the dollar. But as long as we are trading here, it's another reason for me not to be looking for dollar shorts right now. And in my line of thinking regarding the Swiss CPI, that I did buy a few on the Friday fixing. It was my plan, did it. So here we are. As long as we hold this trend line, low 89s, I'm going to try to defend that as usual. I've already started to manage some of it, and it's slowly becoming a free trade. If I get a print above 90 somewhere around here, I'll take another piece off, and then it's going to be really a free trade, whatever happens if we break down sub 89. That for the Schweiz. By the way, I've looked it up while we were chatting, Ryan. It seems that Lowe's tenor or whatever comes in the end of 17th of September this year. That means that we will have 2 more meetings, because I see there's a meeting on the 1st of August and one on the 5th of September for him. So I guess he's on for just that bit longer.
Okay. Yeah. Thank you, mate.
All right. Aussie dollar, I'm going to say it's pretty neutral. We came for the end of the month, we came below the trend line here, but we held this one, and now we're bouncing back a bit. This is also the end of the month that we saw on Friday. As we were saying, we were expecting some dollar sales. Most of the currencies showed us those dollar sales on Friday, and so we are still hanging around those levels on the Aussie. I think I would say we need to really get above 67.25.40 on the Aussie to get going again. And on the underside, if they would surprise to the dovish side, I'd say keep an eye on what's happening 66.25, but more importantly, I'd say 65.90 figure. That's where the first real zone of interest is in the Aussie. That for the RBA overnight, that would be my level. There's another one which is quite interesting that I've been actually trading it a little bit, but then on Friday, once the fixings were over, I covered it, but it's the Euro Aussie. We had this try above this trend line here, and then we came all the way back down to 163.5 here. This is a zone 163.25 to start with, but then also 162.5. If over the RBA we could get a move down there, 162.5, 162 the figure. That I think is going to be an important enough zone to monitor on the Euro Aussie. Okay, we had seen this move lower, held first time around here with a spike, bounced, then we broke violently through it, and then when we went back up, we were like hesitating around here, and then we put in the last push higher before here correcting. We are around this zone a bit of a traffic area. So I'm neutral here, but I'm going to be watching either 165 quarter, 25.45-ish, or what's happening in the 162.5, 162 the figure zone on the Euro Aussie. So that's going to be an interesting one to monitor over the RBA, I would say. Or Canadian dollar, the levels are still the same. 133. Give it a little bit of room above 133, right? It used to be 133, figure 15. This trend line is moving up, so I'd rather watch it around 133 and a quarter, 133.40 on the top side, dollar Canada, and turning around this zone here now, pretty much neutral. Watch out what's happened. What would happen if at any time we would come down to this 130.80, 131, the figure zone. But for the time being, I don't see, unless there's something spectacular happening on the oil front or gas or whatever, that is going to move Canadian dollar right here and now. There's this other one here that I'm finding a little bit interesting, because the Kiwi, we also had this end of month push and we came back here into this channel, which is still a downsloping channel. But I don't know. I mean, if there are weak US data, I think this one has more of a chance to go and retest the 161.80, 0.6180 up to 0.62. The figure will be again an interesting zone to monitor, because we have seen in the past it's really a zone where the market tries to decide upon the next move higher or lower for the Kiwi. Keep an eye on that zone, I would say. If we get weaker US data, I think the Kiwi could be an interesting one. Euro Kiwi, yeah, that rejected this zone here again, and I spoke about that earlier and in the room. This is really an interesting zone here around 180. We are now trading well below. We've already been, or we're testing this former line, but it's been ran over a lot of times. So I'm not going to attach too much importance to that one, but more likely the middle part of this channel, which is around 176. 3/4, 176 and a quarter below. This is going to be an important zone, I reckon, for the Euro Kiwi. If we manage to break this, then I think we could be printing 173s, 174s in pretty soon. That for that. Quick look at what's happening in the metals. Well, not a lot. Gold is trying to make up its mind around this trend line. We moved below. We briefly moved below this 1900 and then bounced. Yeah, it's all going to be decided on US data, I reckon. Yeah, well, there's not a lot to say. We need to go back above 1930s to get going to the top side. On the other hand, sorry, a renewed break below 1900, and that could be really the straw that breaks the camel's back if we get another move under 1900 here. Silver a bit in the same configuration, although the picture looks different. It's still the same configuration. We went below this 22.25, but couldn't break below 22. Then we bounced a little bit, and now we are here, relatively neutral territory. This trend line is starting to be watered down, so I'd rather look at horizontal or fib levels. 23.35. If that starts to go, prior high is a bit close for comfort, but 23.35-ish. Then we may have a chance to go and retest what's happening around here in the 24s, possibly. You know what? I'm short of ideas. Euro dollar, yeah, we're hanging around this 108, 70, 80. If the numbers don't improve quickly in Europe, or if the US data don't confirm the slower PMIs this afternoon, I reckon there is a chance that this euro dollar is going for a test of these low 108s. There is a bit of a chance. If we start to move back above 109.2025, I think then we are going for a retest of the highs. But for as long as, and that's actually our highs around Friday's fixing, this zone here, and that's going to be a sign here, whether it caps or whether it breaks above. I've got a small one here on the fix, a small short in this one from Friday. Already started to manage, so and I'm going to look if it breaks back above 109.35. I may be calling it a day. I don't have any views on the sterling right now in the short term. Dollar yen, well, Ryan already said it, 145. Yeah, there's this bit of a support here coming in around 144, low 144s, and it's also where we held roughly on the last dip around 144.25, as Ryan already mentioned. For the rest, not a lot to say. My overall view on the yen is that for as long as the rest of the world doesn't fall apart and Bank of Japan doesn't come up with surprises, I don't really see why yen should strengthen right now, barring interventions. And if you also look at the JGBs, 10-year JGBs have been very quiet. We may have to wait until the next Bank of Japan meeting to see a retest or the market, which is actually possible and plausible, that the market is going to retest the 50 here, 50 BPs here, top end of their YCC before the next Bank of Japan meeting. It's also it will be a regular feature, I think, into meetings, but that's only music for the end of the month. As we heard last week from Ueda, he still doesn't seem in a hurry to change much, so we'll still have to wait. And this one, unless we are going to hit those 50s, I don't see what's going to put too much upward pressure on the yen right now. Ryan, I think that's it for now. You've done the dollar China. It's banging our head against those 728, 729s. PBOC tries to fix the dollar CNY lower, but for the rest, we are still in the same kind of mood in the market, I reckon, for as long as they don't really call a firm halt to the CNY, CNH weakening. It's a little bit of a yen situation right now. If you have a central bank that is injecting money and still looking to keep yields low or lower than in the rest of the world, there's very little fundamental reasons to be long CNY, CNH, unless we see the economic data turn around. And with that, back to you.
Thank you very much, mate. Well, I think we've done a good enough job of setting everyone up for the week and today as well. So thank you very much, Kay and Stel, for your input today. Thank you to all our viewers for coming along and watching as well. Don't forget to look out for the non-farm payrolls competition, which is out right now, because we have a super special prize available this time. You need to check that out. I'll put the link, well, you can see it on our Twitter feed if you go and have a little search around. I'm saying that because I haven't got the link to hand right this minute. Let's see if I can find it quickly. Nope, so you have to go searching on Twitter for that, but we have got an extra special prize this month, so do check that out and enter the competition, and I think you'll be very pleased with what we're offering. As far as that goes, thank you very much. We will see you bright and breezy. We'll find out what the ISM has done and what the RBA have done, and wish you all the best of luck this week in your trading. Thank you very much. See you tomorrow.
Thanks, chaps. Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.